All right, let's get some analysis on all of that and what to expect at the Open in 2 hours' time. Evan Lucas joining us from IG in Melbourne now. Evan, yeah, fake communication again, spooking the currency and equity markets and commodities too.
Yeah, they certainly are. And again, it gets back to the fact that there is a real disconnect between how they're communicating to the markets particularly. So in the last sort of 24 hours, we've seen real big swings in terms of the mood of what people are listening to and the mood of the actual Fed members themselves. So Bernanke's comments that came out yesterday, they were released early and they also spooked the markets, was quite dovish. We know that he's been like that. There was nothing in there that really changed his statement. The only thing I found really interesting out of yesterday was the fact that he referred to Janet Yellen and her testimony that happened Thursday a week ago as basically where you should be looking in terms of the direction of the Fed and where it will go. And then this morning we wake up and get the minutes from the October meeting. Now we do have to put October in perspective. We did see an employment change of 204,000 jobs. Also, the unemployment level actually slightly creeping back up to 7.3%. So put that in context to what we therefore saw out of that 29th meeting in October. And this morning it is very muddled, and that's why we've seen particularly the Aussie dollar versus the US dollar. It was down almost 1.2% over in the US. So it's dropped from around about the 94 and a bit cent handle well into the 93 cent handle and heading lower. And that is because of the strength coming out of the US dollar and the fact that the minutes themselves are clearly stating that in the next couple of meetings we could actually see tapering happening. That's also probably not new, but the fact that it's the next couple has probably suggested maybe it could be January, it could be February with regards to tapering. And again, that's a miscommunication. The market is very unsure about what they're looking for, and you can see in the minutes as well, members are very different in their views about what the levels are going to be, what sort of unemployment rate they want it to be, what inflation rate they want it to be, whether or not there is an ability to rise the current sort of levels they want to 7% rather than 6.5% on the unemployment. All of that is a real big change in terms of where the market can see the Fed going, and that's why this morning we saw a big reversal in commodities. We also saw in the equity markets, both the Dow and the S&P were cruising along quite nicely in the green, and then the Fed minutes came out and they all plummeted all the way through to the close, and that unfortunately is flowing through into our markets and will into Asia. So for that reason, there's a real disconnect between what the Fed wants to do and what the market believes it's going to do and what all of that means. The only thing they've got clear is the Fed fund rate. We know full well that they are not going to change that, and that tightening, so therefore raising interest rates, isn't going to happen until at least 2015. It's the only thing that is very clear with the statement coming out. But the QE and the unwinding of the monetary component is very, very muddled, and that's why at the moment it's very, very hard to judge where it's going, and why the market at the moment is jumping around very, very quickly on all this macro news that's come out in the last 24 hours and over the last 7 days of differing dovish and hawkish views.
Yeah, absolutely. So what's your call then for the Open?
Well, when I came in this morning at around about 5:30, we actually were looking like being in the green. It was judging around about a 20-point move higher after we saw a fairly big move lower yesterday, and that was, basically bucking the trend of the rest of the Asian region, which were only off ever so slightly. We finished down about 0.8%. Now, this morning, since that sort of Fed minutes come out, we've also popped into the red as the rest of the region has. We look like dropping around about 14, even as much as 20 points. So that's back into the 52.90 handle sort of area after finishing just above 5,300 points. So the drop we've seen in the ASX will probably continue, considering the moves in commodities we saw last night. Watch BHP and Rio. Gold again and also silver were very weak. So Newcrest, it's dropped back into single-digit dollar mark. So $9 is well and truly looking like being entrenched again today after the gold miners yesterday had a bit of a good run. So that's what we'll be watching. And then you've got to look at the banks. The fact that you've also now got a situation where the Aussie dollar is looking a little bit iffy as well. They may actually sort of be the only sort of support there, because the foreign investors can get in and get a yield on the banks that they probably can't get overseas, considering we did hear from the ECB suggesting negative rates, and that would mean a very bad thing for investing in some sort of yield product over there. And then in the US, they know that the rates are going to remain lower. So that may be the only bright spot if the banks pick up a little bit of yield hunting, and same with Telstra. But it does look like, unfortunately, Brody, another red day on screen.
And just in terms of one of those key losers on the market yesterday, Worley Parsons, that profit downgrade yet again from it, that slide in the stock, 26% slide. We've got another mining service company, Ausdrill, out today. It's also had its own troubles, of course. Where to for this sector?
Yeah, and that's the hard thing to look at, isn't it? I mean, the other thing you probably take out of the Worley Parsons numbers yesterday is that there is a very big key theme of underperform and over-deliver. It's certainly an adage that does do well, and you can compare across the sort of the sectors of who's been continuously underperforming with higher expectations and then the other way around. And bought long year is one that I also put in there as well. We will probably be watching them very closely, considering that they're in a similar area to Worley and that their Australian and Canadian business for Worley was the reason they've seen that big 19 to 20% downgrade in FY14 net profit numbers. Watching Ausdrill as well, they're in the same area. That energy and also drilling for things like oil and gas is well and truly being underused. You've then also got global news where somebody like Carl Icahn, and also you've got a few other of the major shorters out there talking about the fact, Jim Spanos for instance, is talking about the fact that oil space is one area they think could be fully valued. So the mining services space are going to continue to suffer. The ones that have maybe looked at getting a fairly big jump in terms of net profit this year will be the ones that the analysts are watching. I already noticed this morning that Credit Suisse has moved its outperformance on Worley. It also moved on Monadelphous and is reviewing its current situation on Ausdrill and also bought long year. So the analysts will also have something to play with in that sort of space over the next 2 or 3 days as well, Bridie, as they really start to look at what will be a very tough year for that mining services space.
Thank you so much for that, Evan. We'll chat to you through the day.